Well, if Kevin Young was Governor of Reserve Bank for a day, what would you do with interest rates next month?
I'd take them right down to about 0.5%, which would still be high by world standards.
But I don't think that's going to happen. So realistically, you think rates will come down? Historically, they look at bringing them down on Melbourne Cup Day, so November.
I think that's what will happen. But the big question, I think, will be, will the new incoming governor have the guts to drop straight down to 1%? He'll need to come out and say, banks, you can afford to pass it on. You previously did, do it now. And we need a treasurer who will get a bit of cut and go and guts to say to the banks, pass it on. You did previously, do it again. Unfortunately, I have to wait till November.
Kevin, just been reviewing the first statement by our new Reserve Bank Governor. I think there's some key points that our members would like their opinion on. The first one being funding costs for high quality borrowers remain low. Also, he states that the large decline in mining investment is being offset by growth in other areas, including residential construction. The third point is household consumption has been growing at a reasonable pace. So Kevin, do you think the Reserve Bank has it right, or do you think they're crystal ball gazing again?
Well, they've kept interest rates on hold as I predicted they would do, and the new governor, Lowe, is obviously on the same land that his predecessor was, which is cloud cuckoo land. Somehow he thinks that funding costs for high quality borrowers remain low and ignores the funding costs for you and I. Then he goes to point out that there's a drop in mining investment hurting the economy, but it'll be offset by including an increase in residential construction, which are bought by you and I, even though the funding costs are higher. And then goes down to say low interest rates have been supporting domestic demand, but then in contrast says growth in lending for housing has slowed over the last year. This guy doesn't know whether he's coming or going. He's all at sea, and as I said in my comment last month, they don't have any confidence in predicting the future. So what will happen next month? I think there will be an interest rate drop. It'll be just 0.25%, which again is too little, too late, which is symptomatic of the Reserve Bank anyway. What they should have done this time, which is what they should have done last August, is go for a big 0.5% drop, and that would have some positive impact on the consumers and the population. But more importantly, what they should have done is gone to the banks and get them to pass the last series of interest rate cuts on in full, which they haven't. And that chart shows that the statement that funding costs for high quality borrowers remain low is a lie, and I don't know where RBA get the facts from, but here we have the Reserve Bank's own chart showing the big fat margins they've got now compared to when there was banking competition. Now we have a banking monopoly that Reserve Bank don't want to talk about, nor APRA, nor the government, but look at the big fat margins, which is the B, much bigger than when there was competition, which is the A. So don't you love it how predictable the Reserve Bank are? We said last week's release that they would do absolutely nothing, they'd sit on their hands, and the reason they would do that is they don't have any confidence in themselves. They can't predict, as one of the international bank directors said, they can't predict coffee. Well, they've said here that funding costs for high quality borrowers remain low, but the economy is driven not by high quality borrowers, it's driven by you and I are in the middle of a credit squeeze. A credit squeeze for the first time in our history has been brought on by a non-elected body, not the government, but by a new banking monopoly that Rudd started in 2009. So our chart will show the credit squeeze we've been suffering, which our commentators aren't commentating on, and our politicians aren't commenting on either. That's hurting your spending, that's hurting you creating jobs. And in here, the Reserve Bank is supposed to be commenting on jobs because that's that number one charter. They're not mentioning that underemployment and unemployment is near 10%. So we have a credit squeeze that no one's talking about, and we have high unemployment that no one's talking about. In fact, some commentators are out there saying we've got full employment. So the Reserve Bank, again, have sat on their hands. Again, they're not going to wake up that they have to lower rates until it's too late. And so the next move will probably be a tentative 0.25% on Melbourne Cup Day. Whoopie-doo. How's that going to help the economy? So we've got a high rate compared to the rest of the world, which is dragging in cash, which is driving up the Australian dollar, which reduces the income we get from our exports. It reduces the number of tourists coming into the country because a high Australian dollar takes more of their dollars to get around the country. So they go elsewhere. So again, the Reserve Bank is attacking jobs, defeating its charter. It's attacking the living standards of all Australians because it's not getting the banks to pass on past rate cuts. So all in all, it's been a bit of a fizzer, and it's Lowe's first RBA meeting. It's a bit of a failure really. So if we're going to have lower for longer from Lowe, I don't think so. We're going to get continued low standards from Lowe longer.